now. But what's happening with urban consumption, and is that trend slowing down? Are rising costs now pinching pockets of consumers? Let's try and understand that. We have with us Abneesh Roy, Executive Director at Nuvama Institutional Equities, and Akshay D'Souza, Chief Growth Officer and of Growth and Insights at Bizom, joining in on the show right now. Gentlemen, great to have you both on the show. Abneesh, if I could start off the discussion with you. The initial commentary from most of the consumer plays or companies seem to be suggesting that there is a slowdown in discretionary spends. What's the reality on ground?
Sure, thanks. Yes, in Q3, lot of the discretionary and urban consumption, there seems to be that there is some start of slowdown, but there are specific reasons for that. If you see Asian Paints, Pidilite, they had a very tough base quarter because in the base, very sharp price hike was taken and there was a inventory build up in the base quarter. My sense is in Q4, Asian Paints, Pidilite, Berger Paints, etc. should see good volume recovery of high single digits in most cases and possibly even double digits. Even for some of the apparel players, for example, the winter which got delayed, that also did impact. Having said that, I do think that yes, because of the startup job losses, D2C businesses finding it a bit difficult, we are seeing a lot of job losses. IT sector job addition is now at a multi-month low. So I think in the coming quarters, there will be selective consumption, there will be slowdown in a lot of these categories also. So we will prefer companies which have ability to come back in terms of volume growth and which are also seeing their raw material correct. So they'll be able to have a margin expansion and increase discounting or giving back to the customer wherever required. So we like Asian Paints, Pidilite. In the staples, we like HUL, ITC, Britannia, and GCPL. And
Right.
in the slightly discretionary, we like Trent and Titan because they are gaining market share also. Trent and Titan expanding store addition also strongly, and definitely Trent is very strong in the Zudio in terms of value offering. So
Sure.
we have to be selective, definitely.
Right. Actually, if I could get you into the discussion, because the commentary coming in from the QSR sector, that seems to be indicating a slowdown. When it comes to apparels, that also has seen a hit. And also because I guess, one was so used to such big numbers or great performance from the apparel industry. Footwear, again, you've seen a hit, be it a Relaxo, be it a Bata, all of them have taken an EBITDA hit. And that's pretty much, the same thing coming in from the paints as a category as well. What category do you think is only seeing a near-term aberration, and what do you think is going to recover fastest?
Sure, sure. So thanks for having me here. So one of the things that we've been seeing right through the last quarter, right, the OND quarter that went by, is that rural consumption was struggling compared to urban. So urban, there was still some movement in products, but minuscule movement really in terms of growth year on year. But what we're seeing now in Jan is we are actually seeing a double-digit movement across both urban and rural. Now, this is very interesting, right? Because now suddenly you are seeing traction happening and traction building up. But word of caution here, we are now comparing this with the same period of last year when you actually had Omicron variant. So, and at that point we have had something like a 10% impact on overall business. So the real growth that you're seeing right now is actually mid-single digits happening across both categories, across FMCG. Now within FMCG, you have early build-up that we are seeing for beverages, as we warm up to the summer months. That's showing very positive signs. We're seeing also very positive signs in confectionaries. I think schools, colleges, all of them, and out-of-home consumption being strong. We are seeing a good movement on that category also. Packaged food is not as strong as we expected it to be, but I think we usually see it build up going forward.
Amnish, why is that within urban consumption there is so much of a divide? We spoke to the owner of Landmark few days ago, and he's talking about sales like never before. I look at ultra luxury hotels are full. I look at hospitality companies. They're giving us a very rosy outlook for 2023 as well. While the topic of today's discussion is slowdown, but within urban consumption also there are niche categories which are not feeling the pinch.
Yeah, it's a good question. With 135 crore population, there will be always two, three themes parallelly running. So you're right. In the top end consumption, we are seeing strong growth. In fact, we met with Hina Nagarajan, MD of United Spirits. She did say that at the top end of liquor, the consumption is very good. Same thing we are hearing even in the paints category, for example. So even for HUL, for example, premium end is growing faster. So yes, premium customers, especially out of home consumption, still people are going back to hotels, etc., international travel, domestic travel, those things are still definitely happening. So the problem is essentially in the urban poor. There still, because of the inflation, there is an issue. But as I said, in December quarter, there were two one-offs. One was winter was delayed, and October month had very high rainfall. So whichever category like Asian Paints, Pidilite, etc., they had that one-off month and high base. My sense is in Q4 you will see a lot of these companies also coming back. Also the rural consumption, the base will become favorable also. So I would say that yes, there is a challenge in a lot of the categories. Plus if you see in QSRs, there are two things happening. So in pizza companies, clearly the expansion is very strong. So there is that issue which is definitely there. Second is the in-store dining is growing faster. The last 2 3 years, because of the COVID, the delivery model was doing better. So D2C businesses, delivery model, those will see a more slowdown versus the in-store consumption and physical and out-of-home consumption, and luxury consumption clearly doing quite well currently.
That's interesting. And Akshay, I wanted to get in your thoughts on the same in terms of rural demand in particular. Are those signs of recovery now visible? And are there any categories in particular that you believe that could support growth for companies in Q4?
Sure. So I think there is surprising. There is actually good growth being seen in Jan, even in rural now. And I think one of the key aspects of that is also to do with easing of inflation. So if you actually look at the whole of last 2022, right, I think we have had extremely high food inflation globally, and it's not just limited to India. And I think if you look at from a local government standpoint, I think because we are an agrarian economy, I think we could actually manage a lot of our food supplies for the large masses and ensure food security, which is something that a lot of people couldn't do. And I think when you get devalued with the dollar significantly, you are generally going to have much higher food inflation. But that incidentally is expected to be much lower this year, and we're already seeing benefits of that in the overall inflation numbers. So you are now seeing easing and easing of inflation, and hence also rising of growth in consumption also at the same time. At the same time, you also see rabi crop I think has been sowed well, and I think we're seeing good. That is also expected to be a good season this year. And I think overall, I think it just puts more money in the hands of consumers who are actually looking to now possibly go and spend. And for once, we are seeing them spending beyond essentials. They're not just focused on buying need products and essentials, but I think they're going beyond into discretionary products a little bit more right now.
Okay. Meantime, Abneesh, wanted to also understand your outlook then when it comes to the discretionary segments in terms of which are some of the segments that have been the worst hit.
Sure. So essentially, in Q3, winter-related impact was there. There was a delayed winter and a soft winter. So apparel clearly saw that impact. Even we saw in QSR, pizza was impacted more, both in terms of demand and in terms of margins, because cheese prices are boiling, and my sense is that will continue for 2 more quarters at least. D2C, clearly there is a cutback in terms of their marketing spends, and customer is also now going back to the physical stores. So I would say in these, clearly the slowdown is higher, but some of the categories, I think the demand is going to come back. So paints, Pidilite, some of the food categories, I think those will remain strong. Even for the value apparel, I think the demand will be strong. That's why we like trend. Also, marriage demand will be strong in Q4, and January will see benefit of a good winter. So I think apparel players should see a better January. Plus, Titan should do quite well because of the gold prices also being high and marriage demand also being strong.
Okay. So Abneesh, if you have to, let's say, put disproportionate wealth only in one stock, and the client says, I have a 3 to 5 year time frame, India is great, consumption is great, there are dozens of companies where I can invest, but I have appetite to only buy one. I can take a 20% downside, 25% volatility, but give me one name. What is that one name?
I think very tough question.
Why is
We
it
have got
tough
a lot of good
question?
companies.
It's simple, big bet, clear idea.
So if you see, Titan has created wealth for the investor any time frame you look at. If you see, currently the organized share in jewelry is only 30%, so 70% is still unorganized. Within the organized also, Titan has huge headroom to grow market share. So I will say yes, from a 3 5 years, Titan is one stock where I think the predictability of growth is quite good. I do like other companies also, but there is one or two, say, new player coming in paints, for example. In Titan, at least in terms of structure of the industry, I think it is quite stable and quite favorable also. So that could be one company. But yes, any regulatory issue happens in terms of gold import, or say the gold prices become volatile because of geopolitical, those will give you the opportunity to buy also. Currently, valuations are not cheap.
Very much, gentlemen, for joining in. Akshay as well as Abneesh, good to have you on board to get in a better sense as to how things are shaping up with respect to consumer spending and what trends you're foreseeing down the line. Well, flat as ever for the markets at the current juncture. We're down 1/3%, and it's pretty much across the board when it comes to the broader universe as well. Individual names like Adani Enterprises, Reliance Industries, they stand out, and of course, result reactions within the broader universe. We take a very short break. Don't go anywhere.